Hey everyone, this is Austin Bateman. I'm here with my go-to lender, Mark Sera from John Adams Mortgage. Mark, why don't you introduce yourself just a little bit more?
Thanks, everybody. Good to be here, Austin. And yeah, just want to say, gosh, hope everybody's safe and healthy out there. I know, gosh, we have two cousins and a friend who has COVID-19, and so just appreciate being able to and thankful for being health and being safe. And so
Yeah,
yeah, I'm Mark Sera with John Adams Mortgage. I am a loan officer. I've been at it about 26 years, so I helped a lot of people along the way. And thanks for having me today, Austin.
yeah, absolutely. And Mark says he's helped a lot of people. That is very true. He's one of our top producers, within the real estate one family companies, and he does a lot of stuff with me. He's a great resource. So let's go right into it, Mark. You know, when buyers are going to start looking for a house, they always start looking on Zillow right away. They don't think about the financing yet. So when they come to me, and they're ready to make an offer, usually we have to take a step back and, figure out what the financing situation is going to look like. So, could you explain to me when I bring my clients to you or their lenders, what are you looking for to get them pre-approved for a loan?
Yeah, great question, Austin. And one of the most common I get. So, typically, I'm the first person that they would hope to, speak with, because obviously getting pre-qualified, getting pre-approved, let them know what they qualify for is so important. And so typically the process looks something like this. They would, let's say they call me on a phone and Mr. Smith would like to be, pre-approved for a home loan. So I basically gather their information over the phone. It takes typically about a half hour. At that time, I would also look at their credit, as well as I'd ask, their employment information for the last 2 years, their income, whether their base salary or commission or how that works, as well as and then their assets, and then do they own any real estate currently, and then then I would analyze all that typically while I'm on the phone with them, that 30 minutes. In other words, I'll look at the
Hmm.
credit, I'll look at what's called their debt to income ratio. Credit is the driving force these days, though. And then the
Yes.
debt to income ratio, we'll talk about how much money they would need to purchase. And then typically what I'll do, if everything looks good on that first conversation, I will email a pre-qualification certificate to you, Austin, the real estate agent, as well as the client. And so that's kind of the first step regarding pre-qualification. And then once they actually, I also send them an email of documents to gather together, like your pay stubs for the last 30 days, last 2 years or last year's W-2s. And then they would upload those to their secure portal. A lot of this is handled, over the phone and through the mail,
Hmm.
although I am, in Royal Oak, when we are able to go to our office. And then when they upload those documents, I will look at those and then issue a pre-approval, as opposed to a pre-qualification. Pre-approval meaning I've actually looked at the documents.
Awesome. Okay, and that was a great lead into the next question. What's the difference between a pre-qual and a pre-approval? So for you, it's just verifying the information. A pre-qual would be, based on what we know about you and what you say and your income and assets. This is what we could, do in terms of a purchase amount. And
Yes,
then,
absolutely. Oh yeah, go
go
ahead.
ahead.
Yeah, you summed it up perfectly. I verified, their assets, their income, looked at their W-2s and these type of things, and then that would be a pre-approval letter, which I would email out.
Perfect. Okay, and and just from the real estate side of this is when I'm reviewing offers on my listings or I'm sending offers for my buyers, a pre-approval seems to weigh more than the pre-qual, mostly because you've verified a lot more information and you feel more confident in that number. But again, when we're talking about pre-qual and pre-approvals and making offers on houses, Mark, touch on the fact that it's not a full approval of the loan yet.
Yes, you are correct. That is not a full approval. And so, it's a process. And although when I speak to a person over the phone, I do run them through what's called an automated underwriting engine. And so, for lack of a better word, it takes all their information that they've told me over the phone, and it kind of cranks out an answer. And the one we like to see is what's called approve eligible. That means everything's looking good, and we're moving forward. And so, but to answer your question about, it is not a final approval. It's some people say it's the mortgage process is a choreographed dance with a lot of steps. And so
Hmm.
those steps include things like the appraisal, and obviously there's the inspection of the home. We'll verify their employment. We'll verify their assets.
Hmm.
We check to make sure they've had no foreclosures in their history, bankruptcies, these type of things. And so yeah, there's a lot that goes into it, and so that is not your final approval. The final approval will be once the underwriter reviews everything. Again, all those items I just mentioned, has basically cleared everything, and then we'll get what's called a clear to close, which hey, we're always
Hmm.
excited about receiving those.
CTC. That's what we
Yeah,
love to hear. Yeah.
yes, and then we'll be
Okay.
emailing out, and yeah.
And so, when we get that clear to close and we're getting ready to go to the closing table, I know that everyone seems to think that you need 20% as a down payment, and it's just really not like that anymore. My parents, they bought their first house in 1990, and they needed 20% down, and I have buyers now who are doing 3% down. So, you know, uh, maybe we don't need to talk about the down payment, but you're not paying just 3% of the purchase price at closing. There's cash to close. So what are some of the things that are included on the lending side in those closing costs?
Yes, yes, great question. So there's three things that go into money needed to purchase a home. Number one is called the down payment, and so like just to give you an example, on let's say a $200,000 loan, Austin. So if let's say if they put 3% down, so that would be $6,000, and that is your down payment. That's number one. Number two are what's called prepaid items. So we set up what's called an escrow account for the payment of your property taxes and insurance, and then you have
Hmm.
to reimburse the seller for any property taxes they've paid in advance. And then you'll also need to purchase a homeowner's insurance policy for 1 year, and then there's some prepaid interest on there depending on the day of the month you close. So in the example I just gave, let's say if property taxes were, let's say, $3,000 a year, your prepaid items, as a real rough estimate, might be around $4,000. And so that's item number two. So you got the down payment 6,000, you got the prepaid items at 4,000. And then the last item would be what's called closing costs, which are things like the appraisal and title work and title company closing fee.
Hmm.
That's typically, as a general rule of thumb, 2 to 3% of the of your loan amount. And so so you've got another couple $1,000s there in closing costs. And so for everything in the example I just gave, you may need $13,000 to $14,000 to purchase that $200,000 house.
Thanks for laying that out, Mark. That's very helpful to a lot of my first time new buyers. Now, I want to go into a little bit more about what's happening right now in Michigan. In Michigan, we're under a stay-at-home order. No one's allowed to leave the house. So what's happening in the lending world and in the mortgage world? Are guidelines changing because of the economic hardship that we see from the stay-at-home and COVID-19?
Yeah, great question, Austin, as well. So, and some of this, it's a moving target as far as what's going on. Now, I will say, so recently, our FHA guidelines, we needed a credit score of about 620, and so now on FHA, you need a credit score of about 680. And so,
Wow.
so they have increased that for your FHA, borrowers. And conventional, we haven't seen a lot of changes to the guidelines. We still have the 3% down available, and then the appraisals. You do see differences, like for conventional appraisals. It used to be that many times you needed a full appraisal, interior, exterior. But now Fannie Mae and Freddie Mac, which is the two agencies that buy most of the conventional loans out there, they are allowing a desktop appraisal. They are allowing exterior appraisals, or the full-blown, interior and exterior. So so we've obviously definitely seen some changes in the types of appraisals that are allowed, as well as sometimes we'll get what's called a PIW, or a property inspection waiver, which means that we don't even need an appraisal. And so that's a nice aspect. And for the last 5 loans that I've received property inspection waivers on a purchase, all of my buyers have elected that, and it saves them around $500.
Wow. That's pretty incredible, that the specific, going back to Fannie Mae here, they're allowing appraisal waivers. And, I know that a lot of buyers are willing to pay more than maybe what the bank is willing to lend in some cases. And in the crazy summer markets, you see cash guarantees on over the appraised values. And that's a whole other video. But so it sounds like there are some, good things and some bad things happening and changing daily in the mortgage world. Appraisal waivers, maybe making it easier for appraisers to, get you those values without actually risking health and going out into the homes. But then on the other side, FHA, to get an FHA loan, which is usually something that allows for lower credit scores, is now up, would you say, up 40, 60 points?
Yeah, we're up to it was about 620, and now it's at about 680. So.
Wow. So that probably kicks a lot of people who were in the home shopping or the home buying market, kicks them out, doesn't it?
Yeah, it could have that effect. I mean, we'll see what the future holds regarding credit scores and liquidity and that, but right now that is what we're looking at.
Okay. Well, it's good. I mean, good and bad, but that's all right. Now, this is a big one, especially for a lot of my buyers right now, is some people are taking pay cuts, especially if they're work for the big 3 in the auto industry, and some people are getting furloughed. So how does that affect your ability to get pre-approved or close on a loan that you already have?
Yeah, that's been a hot topic right now, Austin. So the the long and the short of it is, if you're furloughed or laid off, we cannot close your loan. So you have to be employed. Now, I have some refinance transactions, and interest rates are so low these days that many people are refinancing. And so I have some refinance transactions where, like I have one where he is furloughed, but he's supposed to go back May 1st. And so we're hoping that he will go back May 1st, and then we would, close after that. And so, as well as some of the employers have, the big 3, some of them have cut, pays, or deferred the pays, meaning that you might be making 20% less than you were making. However, the one of the big 3 automakers is going to pay you back within a year.
Right, GM, yeah.
Yeah, but now we do have to use that lower income to qualify. In other words, if they're making 80% of what they would normally make, we do have to use what they're making currently, which is that 80%
right
number.
And we'll end on one specific example here of mutual client for both of us. One of my buyers is pre-approved through Mark. It's a couple, so one of them works for the big 3, and the other one works for another auto company. And one took a pay cut, the other one didn't. One had a higher DTI than the other. So I think, Mark, what you did was you ended up just qualifying one of them instead of both of them to kind of balance out that debt and also that pay cut, and they were still able to get the full pre-approval amount that they were hoping for.
Yes, that is correct. And you kind of summarized it, right on. In other words, they were fortunate enough to be able to qualify on one of their incomes, and so that's what we did with that one, and we are moving full steam ahead on that. And again, I encourage everybody, get pre-qualified, get pre-approved. It's so important right now. When they turn the switch back on and this economy comes back and we're able to leave our homes, you know, those, you need to be ready. You need to be ready quick.
Definitely. And I think the takeaway from this is pretty much wrapped up what Mark said there, is that you know, if you were in the market, or you are hoping to get into the market to buy a home, you know, now is still a good time. If you have a job, or at least have a restart date, you know, there are ways that we can still get you pre-approved and still get you to buy houses. And I know for a lot of people, they still have to buy houses. People's leases are ending. And while it does seem like a strange time to prioritize home purchase, you know, it still makes sense, and there's still things we can do. So Mark, I'll let you plug your information. Thank you for being on here today. And I think my buyers, and hopefully other buyers out there, are going to find this very, very helpful. So go ahead and plug your information.
Okay. Yeah, thanks, Austin. I'm with John Adams Mortgage. Again, Mark Sera. My phone number is 248-760-0288. And then the email is msera, so M and then S as in Sam, ERA at John, JOHN, Adams, ADAMS, Mortgage, MORTGAGE.com. And obviously, Austin, you have all my information as well.
Yeah, and I'll put it in the video for you. Again, Mark, thank you very much.
My pleasure. Thank you, Austin, for having me.